got to be pretty tactical in this market.
We would agree. And if we look out over the next year, or not even in the shorter term, but over the next year, I think we're still going to be grappling with this question about economic growth and how that impacts interest rates and inflation, especially because many investors today have never invested through an inflationary environment or an environment where interest rates were rising. So I think it's going to create volatility, but that in turn creates opportunity. So to your point, Scott, I think it means you have to be a little bit more tactical. So selling your winners when they've moved up significantly, maybe taking advantage of some of the opportunities in the market as they present themselves. And I think we will likely see this continued shift, although I think ultimately cyclicals are going to perform better than the growth stocks. But I think to the extent that we do get a growth scare, whether it's COVID related or related to interest rates rising too quickly or inflation that looks like it might be here to stay, I think there will be a rotation back to the growth side. So I think it's important to have exposure to both. But here and now, I think the opportunity really is presenting itself more in the growth side than on the cyclical side.
Doc, you're the one more than anybody else, I think, of late who's been a little more concerned about where rates are going and what the reaction in the market was going to be as a result. That if rates continued to tick up, you thought we could have a substantial correction in the market. Do you still feel that way?
I still feel that way, Scott, but now I'm not as worried about that scenario playing out. And here's why. Number one, you've got a ship, a big cargo ship, sideways in the Suez Canal so nobody can pass. That means a lot of goods that go into Europe as well as out of Europe aren't making that trip right now, Scott. That's 10% of global trade. Number two, the problems they're having with the vaccine and even Angela Merkel doing that 180 on the lockdowns that she had proposed over Easter. I think those are things that have put a lid on growth over there in Europe. One, a natural disaster of sorts, that ship, and the other, the fact that they haven't got their act together yet on vaccines. So I think that the growth, if we were both growing at the same time, Scott, the two of the three largest economies on earth, the United States and Europe, if we were just booming, then yeah, I'd be more worried about that 185 on the 10-year, 195 and 2 before June. Now, I think that is mitigated by those things I just described. So I am not as worried about that now. I think this is sort of like when you hear talk about taxes increasing, that's another way you hold inflation back. I think this has done that for the Fed, and sooner or later they'll address that either in testimony or just in straight out speeches that the Fed speaks will be making.
Okay. So, Steve Weiss, I want to focus and really fixate on what Ricky said about this notion of taking some profits in things that have run up a lot, even as, he continues to favor cyclical stocks and things that are tied to the recovery in the economy. And by the way, he's bullish on the outlook for the economy, as is the Fed chair, who just reiterated that within the last hour. I've got, and some of these holdings are in your portfolio too, and the others, and I know our viewers. So all-time highs today out of the cyclical space: General Motors, Whirlpool, Caterpillar, Deere, Dover, Honeywell, Jacobs Engineering, Parker Hannifin, Snap-on, Stanley Black & Decker, United Rentals, Dow, Corteva, Home Depot, and Lowe's. I've got 52-week or multi-year highs today in General Dynamics and 3M and Textron, United Airlines. I mean, there's a lot of names from a lot of cross sectors in the cyclical space, Steve. Is it time to look at these gains and do what Ricky Sandler's doing and look to take some profits and some chips off the table, or not?
I believe that you definitely have to start looking at it. You look at Caterpillar, which is selling at 20 times forward earnings. That's if they get there. And I think that's expensive. Look, if Powell's right, we have transitory inflation, then that's not going to be good for Caterpillar. So I think those are way too valued. Now, GM, from a different story, it's still a cheap stock. And I believe you're seeing a re-rating of the auto stocks. I own GM. I own Porsche. I think those continue to go. So some of them have just moved too much. I was looking at commodity prices. Freeport-McMoRan, not far off an all-time high, or at least a multi-year high. The stock has moved up twice what the price of copper has. In other words, copper's up about 13%. The stock's up 30% year to date. That's too aggressive a move, in my view, when copper prices have come back a little bit. So, yeah, so you got to be taking some profits on the cyclical stocks. And also, what we're seeing now is that the high flyers in the technology world, and I've made some mistakes in the portfolio, not taking profits on some of the real high flyers. None of those, of course, but I'm talking about some of the others that are more reasonably priced. They're not going to come back anytime soon. So I still think you can take profits there.